Minda Corp posted a strong set of numbers for Q4 FY22. Rising content per vehicle, higher aftermarket demand, and exports helped the company post robust revenue growth. Operating margins also expanded despite raw material price challenges driven by operating leverage and prudent cost management. A recovery in demand post the pandemic for passenger vehicles and two-wheelers, increase in content per vehicle, and growth from new focus areas make us upbeat about the company. Strong order book and robust product portfolio add to our confidence. With resilient performance across segments, new business wins from new clients and existing ones in wiring harness and mechatronics business, the company posted year-on-year growth of 19.4% in top line. Revenue from mechatronics and aftermarket grew 6% YOY, driven by increase in the share of business and resilient aftermarket. It is noteworthy that despite a significant rise in raw material costs, EBITDA margin remained above 10%, coming in at 11.4% in the March quarter. Minda Corp generated around 66.3% of its revenue from two-wheelers and passenger car segments in FY22. With the easing of semiconductor shortage, these segments are expected to witness significant surge in demand. Further, pent-up demand coupled with the demand due to opening up of colleges, schools and offices post the pandemic, the traction in these segments is expected to remain robust. Management is quite upbeat about these segments and has indicated that the preference for personal transport will continue to be a key growth driver. With the reopening of the economy, the CV segment has also started to pick up. In fact, the budget has promised a huge increase in investment to revive economic growth. This is a positive development for the construction and capital goods sectors, and it is expected to boost CV demand. Further, the government's scrappage policy will be a key driver for the pickup in CV volumes. What makes Minda Corp different from other auto component manufacturers is the unending desire to innovate. The company has been working on various new areas that are expected to provide significant growth in the years to come. It is currently focusing on keyless entry solutions, for which it is in talks with multiple OEMs. These solutions are expected to have 3 to 4 times content per vehicle compared to the traditional method. In the emission system, it is working on wiring harnesses, compressor housing, and powertrain sensors. It is focusing aggressively on the EV space as well. The company is developing products related to battery chargers, BMS modules, motor controllers, sensors, telematics, ITS, etc. In fact, it has already won orders in this space. What is encouraging is that Minda Corp continues to bag new orders that translates into its earnings visibility. In FY22, it received orders with an overall lifetime value worth over 5,930 crores. Of these, orders worth 3,530 crores came from new businesses and about 2,400 crores from the replacement segment. The company also received 952 crores worth of lifetime orders from EV players, which is very significant. Management expects to generate 80 crores from EVs in FY23, up from 20 to 25 crores in FY22. The share is trading at an attractive valuation of 16.8 times FY24 projected earnings. We advise investors to buy this stock with a long-term perspective. The risks: any slowdown in demand could hurt the company's financials. Additionally, any adverse movement in commodity prices would increase raw material costs and hurt operating profitability.